Picking those higher levels. Okay, so let's get to sector spotlight, which is going to be banks today, talking about a sector that has been, really unloved but trying to turn. Do you think as a whole this is a turning point for the sector, because we did see a bounce yesterday?
Well, a turning point would be good. The retail investor loves to buy the banks. A lot of Bank of America, JPM, Wells Fargo are in those 401ks, so it would breed some confidence if it finally bounced. But there are just so many headwinds that I want to make sure that you just don't dive back in because money rotated there almost like defensively.
Right.
Like every time the market goes down now, some money goes to the banks because it's like a defensive play. I'd rather it be a leading play. But yesterday, Wells Fargo and JPM both had very potent bounces. So if you take a look here at JPM, let me show you what I'm looking at. JPM actually held lower support, held the 200-day. Engulfed the previous day. I think that the easy play or the easy bounce will take us back to 44 or 44.50, and then what will be crucial here is how this stock acts around these moving averages, which would be heavy resistance around 45.20. So not much room here, about $1 or so of that easy bounce, and then resistance.
And the reason why the stock rallied was because JPM raised the dividend, but then CEO Jamie Dimon said that's not going to happen anymore for a while. He said that was kind of the cap. So you have to also appreciate that as maybe it was just a quick turn for that one. And I think Wells Fargo is a different kind of story, and it was a very interesting rally, up over 3%. And I talked to a couple people being like, why? What happened? There was virtually no news. Well, Buffett didn't sell his stake. It's fully, almost fully integrated, Wachovia. But I think it's because it's not one of the other banks. It's not the Morgan or the Goldman or the Bank of America that has, the government breathing down their neck over mortgage-backed securities. What do you think?
Well, it actually was up just as much as JPM yesterday.
Even more.
Yeah, a little bit more. So you want to see how it continues. And I like to use retracement rules. If a stock just say was up 3%, I want to see it hold 50% of that as we move forward. And if it does, that shows you that there's commitment to that move and it can continue higher. So if you look at Wells Fargo, it's actually below every moving average. But this is a day to take notice. This engulfing day that I call it, that just ate up about 7 days worth of action, is powerful. So the next move could be to test these moving averages around 29.66.
But you have to see how it holds today.
Or holds in the next few days. So what I want to see is, if it holds 50% of this day, then actually it can go sideways and continue. So you want to see commitment to that move. If all of a sudden it gave back more than 50% of yesterday's bounce, that's all it was just a bounce, oversold, money went there, and it's not a day to take notice. But if it holds, maybe there'll be some continuation. And also, Bank of America could play along, and Goldman Sachs also held that lower level.
Yeah, they all held, which is impressive.
But it just was all so beaten up.
Right.
Goldman Sachs, we talked about shorting it below 151. It went to 140 after a move from 160. So down here in this 142 area, it could get a tradable bounce. So what I want you guys to do is write down this lower pivot. If it starts getting above, just say 142, it could bounce to 148. That's a nice percentage move, and that's how you make cash flow in a group that might not amount to something but good short term.
And then for the longer-term investor, I have to do the plug for the credit card companies that don't have this government overhang, that's not going to be subject to annual stress tests in order to have buybacks or raise their dividend. I mean, we even saw Buffett take a stake in MasterCard for the first quarter. So I think it's also time, if you would agree, to put that on your radar when we're looking at banks that are sort of holding up pretty well.
Yeah, we've talked about Visa, we've talked about MasterCard, AXP had a good day. So this group has been one of those groups that have acted better, that if you're still invested there, you could stick with. They don't have as much risk or overhead headlines, so it's acting well. So stay with that trade, just don't chase that.